Hello, gang, and welcome to the wild ride. How is everyone holding up here today? Good? Awesome. I got a lot of goods. That is wonderful. I am glad to hear that. The market has, been performing pretty well. I mean, technically, we've got really nice, sound strategies. If you are an E-mini futures trader, though, you might have wanted to go over to the micros for the current market to be on comparable levels. It's kind of like what used to be one contract on the NQ is now like one contract on the MNQ at the moment. It's gotten pretty crazy. I actually saw the other day a 3-point spread on the NQ. I know Andrea and Karan were following along as 2 to 3 point spread on the NQ. I've never seen that. We just had a 300-point move in half an hour. So this is fun times right now. But actually, when we look at things, we have had incredible technical moves, like measured move after measured move and strategy after strategy, all doing really, really well. Yes, we have those zones of pain where things are just kind of messy, choppy, back and forth, lots of tails. But when we get the movements going, they are pretty good. And if we're looking at, the tick charts on the MNQ, we're getting some pretty smooth moves out there. So I'm going to flip on over here and we're going to start with the NASDAQ. So last week, what did I tell you guys last week to watch for this week? It's definitely a good market for my style of trading. I'll brag a little. I'm doing pretty well right now. It's been a really fun week. Trying to pull up my chart over to my screen. Here we go. We'll use this one since the other one doesn't want to drag. So let's see here. I mean, here, look at this. This is a great example. We had a megaphone here at the lows. Nice rounding off, and this was coming off of almost exactly a measured move on the continuation. Beautiful two-wave continuation on the downside here. We've seen a number of really great setups, and I want to look at first our daily chart though. So again, what did I tell you last week to look for this week? We looked at a few things that had happened in the past. And what did I say? Third time is what? Who's paying attention last week? Most likely to fail or break, not do what you were expecting it to. So what we had were these previous two corrections, right? And here we were going into Friday. And what do we have again? Same style of correction, about the same size of correction, and higher probability that this time the correction would keep going. I confess I was not expecting it to keep going quite as far as it went, but it's really not outside the norm. You're going to see this type of action usually on individual securities when news hits. So things like earnings will bring a stock like this down. It's pretty normal. It's not extreme in the grand scheme of things, although it sure feels like it for investors right now that are seeing their portfolios just give back an incredible amount, especially if they've been adding on the way up here. Now, we are coming into a major support level right here. And what you're seeing is that as it came in and tested that zone, we got a pretty good bounce, and it just kind of went parabolic crazy there intraday on the extension. But even that move on a 1 minute time frame is something that we've seen over and over again. So yeah, the range was 300 points, maybe a bit more, but if we look at how it unfolded, look at the symmetry in this. It's really quite beautiful. We've got these nice two-wave moves. This is basically a tilted correction here in the middle. So this is our wave one up. So wave two up. We've got two waves there. Each of those has two waves in it. We've got nice move here with a momentum reversal off of the low to turn it around to T. So really, really nice price action intraday and after hours too. After hours has been a little bit more tricky for trading. That's where our spreads have gone crazy. But look at this. Check this out here. See this? We've got that nice shift. This is where things were looking so really tricky though. Look at the range of the overlap on each of these bars and how many tails we have. This is abnormal. So this is not the type of activity we see, but the patterns are still there. So when you're trading these, what you have to do is you got to keep a little bit of a wider stop and you have to drop your contract size or your share size if you're trading like the spiders or the Qs or some other ETF, and widen up your stop and allow it to just play out according to the same type of expectations you would any other time. So here's the bigger version here, a little bit of a slow start here, but really good follow through. And then the pattern that we see here is one where what we're usually looking for is a phoenix and then a 1, 2, 3. So this had the phoenix and then it kind of did a double tap back into the phoenix. So this whole thing here is what I would consider to be the phoenix. That's because this is a symmetrical triangle here. So when this popped and it came all the way back into it, I viewed this as the second wave of the correction. So then our 1, 2, 3 goes like this. And then the momentum just kind of increased and kept doing that. Usually if this is a strong drop over here, if it comes into a 76.4% retracement level, that's a good zone to start looking for some of the extra corrections to happen. It's really hard to predict when that's going to end. So you've got to look at things like just the measured moves and then, smaller little channel breaks at highs like that. This looks like a lot of those booming stocks, like even, what we saw in the Bitcoin year or two ago. And yeah, so that's what's happening right now. And what we can go back to look at the daily time frame is that this type of action, because it is going to trigger a lot of people like on a more technical fundamental. Oh my gosh, you guys, can you hear that fighter jet? Hold on a second. Did you guys hear that? Like went right over my house. That was loud. They get close, but that was like really close. And they usually come in pairs, so we'll see. Anyways, so what we're looking at here, I lost my train of thought there now, is that usually we start to get these programmed things coming in here. So like at certain levels of retracement and certain key points, a lot of the programs will automatically start, investment programs will automatically pick up shares at certain levels. And that's what you'll start to see coming in at things like this, and they can lead to these pops that have a really horrible, horrible name. And has anybody come up with a better name for it? We will just call it the let's call it, let's see, we'll call it a tennis ball bounce. Okay? We're going to call it a tennis ball bounce. I'm renaming it here. So we've got a ball bounce down here where you got the momentum coming in and then it goes up and then it can go and, bounce and keep kind of going down. Sometimes we do see these manage to do complete recoveries, like over here. This scared the bejeebers out of some people, but nothing like what we got going on over here. So what we had was that really extreme bounce back up. And if it manages to make it up about, 2/3 of the way, a lot of times it can make it further, but we can't guarantee that because you will also see basically all different kinds of levels that will hit on bounces like this. And it just depends upon the momentum that's coming in. So what we usually like to see is if we got like a steady V movement going on where you got two waves down and two waves back up, previous high is a great level to short. You're usually going to see a good level of resistance over here. So here's a good example of that. So at this point, you look for short strategies. This back up here, really, really, really difficult to break that sort of level on any rapid bounce. But what it can do is it can do a creep thing and then go and eventually break the highs. I don't expect that this is going to happen here, you guys. When we were looking at what's the market going to do at this major level of resistance on the weekly and the monthly timeframes that we've been tracking for a very, very, very long time, you can see here's our monthly. Here is the measured move we've been tracking. So seriously, even though we've got all of this news coming out now, we were already looking at this resistance. So it didn't catch any of you off guard, did it? Maybe the degree that it reacted, but I certainly hope that since you've been here pretty much every week for the last year, that the fact that we are at this level didn't catch you off guard. So here's our weekly, and we have what, you guys? What triggered here? We just spent the entire week talking about this. In League of Traders. Those of you not in League of Traders, what are you doing? Why are you not in there? You're going to have to tell me why you're not in there, seriously, because I am curious. So yeah, we've spent the week talking about gaps. So what kind of gap is this, you guys? The specific name for this gap is breakaway gap. Yes, so you got a core full pattern here. The gap triggers that breakaway. So earlier in the week, we were looking at the market and I'm like, hey, you know what? This can still keep going down. I think we were comparing it to oil, right? If I recall correctly. I don't know. There was another market we were looking at and I was showing you guys, hey, this is how this can going. And you know what? It followed almost the exact same sequence. And I think it was in oil. It's just a smaller intraday setup on oil. But what it had was basically the initial move down, corrections, and then oil kind of pulled up a little bit more, but then it had another correction and it's just stair stepped down. So what did we talk about before this week? Trend development, right. So how many waves do you guys count here? This is a trick question. How many downside waves do you guys see? We've got everywhere from 2 to 9. Okay, so the last 2 weeks before our gaps, we were talking about trend development. And what I do is I look at trends more in waves of two than waves of three typically. So what this means is that this is my first wave down. Here we go into correction. So I'm marking this low. Coming down again, we've got another low here. We're coming down again, but you know what? These lows are not the same distance. So when this bounces up here, I'm considering this whole thing to be part of that correction and this to be the break here. What this means is that as a whole, we have a move down here, a two-wave correction, and then the second main impulse move. So what we're looking at now is that this is at a widening up zone. So there's more likely to be a lot of back and forth type of action here. Now, because of the situation, with how things can kind of go and do those tennis ball bounces at lows like this, we could get a really rapid turnaround that can fling and bring things back up. That's why this afternoon I said, don't underestimate these crazy bull bounces because sometimes they will just keep going. So don't get caught trying to force a counter trend trade unless you have the confirmation of momentum shifting on multiple time frames and really strong action for that momentum reversal or any other sort of reversal. And be sure to use advanced trade management because on the ones that do flip, they should go pretty quickly in a market like this. So if something is not going up for you, start to get more aggressive. If assuming you're trading the patterns that I've been teaching you, because as you guys have been working with them, you can see there's certain times that they should go by. And if they haven't triggered by that time, you're more likely that they're going to fail. So you want to tighten up your risk parameters on them. And what we're going to be doing in League of Traders over the next couple of weeks, next week we're going to get intraday on gaps. So how to get into patterns like this right out of the open with the gap. So what do we look for to show us the gap's going to close versus continue? We spent all week looking at the most favorable types of gaps for each direction. And next week we're going to look at what's going on intraday and what strategies we can use and apply to our intraday trades. And after that, we're going to dive into advanced trade management again. So that is the type of stuff that is going to save you in a market like this, especially another thing, don't overtrade. That'll also save you in a market like this. So be really, really cautious because of the volatility. Just realize that you've been going from the go-kart race to suddenly you are in the Daytona 500 and adjust accordingly. I liked the meme that Harvey posted the other day. I'm going to show that to you guys. It was perfect. We were talking about this. Let's see, where did he put it? It was way back. Here's me looking at some of these 3 to 5, 2 to 3 point spreads. Here we go. So here's what we got going on, you guys. Watch out, okay? So that's what made me laugh here this week. All right. Not me, it didn't make you laugh. That's Harvey there. See right there? That's Harvey. Oh, you didn't post it? Who posted it then? Oh, Karan posted it. Sorry. It was still very, very applicable to the current market. Anyway, back on track here. Let's see. We are going to go over, look at some of these other markets. Pull up the Russell really fast. Notice this with the Russell, so we were talking about this over the summer, how this was trading in this really, decent range here, but it wasn't perfect. It had the extreme move on the upside and a lot of really sharp back and forth moves, a slightly higher high. And that meant that there was a risk that even though it could go to like a 2T or something like that, it could do it with slower momentum or it could have a higher chance of failing because extreme move, then range. If you have a more gradual move or even a slower move and a range, you can get a measured move or even a stronger than measured move. The opposite tends to happen more when this is going on. And so it hit that resistance back here from our channel breakdown zone, and it just couldn't budge past that level. So we had the breakaway gap here again too. Notice it was also a two-wave measured move, and that's been like the theme through the market like all week because it seems like the technicals are just gravitating towards those measured moves. We are at support again here. So just like we saw on the NASDAQ, these prior pivot highs and lows are support levels, but it's hitting really hard. So they can have many different ways they react to that. They can go through them and just kind of slow and like gradually decline as they're heading into them. You can they can go into like a range like it did here. You could see sometimes where it whips back up. And again, not as excited about a whip. I definitely will not expect any immediate whip. If it does, it would be more like this over here. We've got some pretty significant things going on out there in the world right now that in the past, people have been a little bit nervous about, but now they're kind of like piling onto each other. So we've got even my kids coming home worrying about stuff. So coronavirus, the one of the big ones that I think is also a huge factor in the current market is the primaries that are going on right now. Who's going to come up as the Democratic candidate against Trump? That is going to be a huge thing too. And this is going to be really, really chaotic, you guys. So you thought the last elections were crazy? You ain't seen nothing yet. Wait until you see this one. It's pretty clear that Trump is wanting to run against Bernie, basically to pit himself extreme to make sure the centrists don't, go that way. So we'll see. We'll see what happens. I have never seen an election quite like this before. Trump says, if I win, you will see the biggest boom of the stock market ever. Did you say that again? I don't know. Sounds like something he would say. But anyway, I think that those primaries and the debates and everything that we've got going on right now are also a huge factor in the uncertainty that we're seeing right now. I think even more so than coronavirus was originally. I think that that was what is weighing mostly because that's what's going to affect a lot of, company policies and things like that going forward. But now with coronavirus, you're going to see a lot more disruptions with transportation and basically every major industry out there. We're starting to see city after city start to initiate strategies to, prevent disease spread and all of that. And it's something that's going to build. It's not something like SARS will hit it, a couple of months. Nobody was really worried. It was mostly in the Pacific Northwest, la da 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 da. It's not going to be like that. So, yeah, got a lot of uncertainty out there. And you know what the market doesn't like? Uncertainty. Yes, does not like it. So, my my best friend from all the way from when I was a little kid, he messaged me last night and he's like, So have we seen the bottom yet? I'm just like laughing at him. Sure. No. I would not go placing any bets on anything like that. Let's see. He's one of those guys that's always looking for, you know, the best pullback to buy. When you're buying pullbacks like this, I kind of view it as going cautiously, hope for the best, plan for the worst. So make sure you are using that advanced trade management that I've been teaching you guys. For League of Trader members, there's a lesson in the bonus section on stops and adjusting stops. So that's going to help you out as well. All right, here, let's go take a look at some of the other markets. I'm going to pull up oil for us. I've been mostly trading oil right now because when the market is going totally nutso, oil has not. I am still able to keep the exact same contract size and exact same risk limits as always on oil right now. So not really a whole lot has been changing. And that's one thing you can do too if you're in the indices and you know, things are just going so fast. You want somewhere else to go and still be active. That's one thing that you can do. So one of the difficulties right now in the market is not that the patterns aren't working, but trying to get fills and adjust your trades and make all of those detailed adjustments and such in time is really difficult because you might see a trade and bam, it goes and you're just stuck with whatever your original order was, not able to make the adjustments that you might need. So that's been the hardest thing, I think, that for me that I've been running into this week. It's meant that I've got to make sure I got to go up to those larger time frames, and I've had to adjust my ATM orders, my ATM strategy orders, to make sure that I have enough room there to play with things. So here's what's going on oil. You can see we had that check mark. We were looking at this a couple weeks ago. So the check marks led to a 1, 2, 3 here on the downside. So we're getting extreme on this impulse wave on the downside. Overall, this means the current momentum is like this, but it's also breaking down out of this channel. So what we usually see, and this was what we talked about earlier, is that when you get an extreme bounce like this and it continues, it tends to start to go more choppy. So this could bounce, go to another low before it tries to turn around again. This is a good example of what's happening right now in the NASDAQ. So this is the prior highs. So that's what we're seeing coming in here. This is a weekly chart of oil. Let me compare this to that NASDAQ chart for you. Put it on the daily and squish it up there. It's not cooperating perfectly, but hey, you get the idea. Try that again. All right, so you got your break higher, got your strong move. The difference here is that there was a better momentum shift on oil than there was on the NASDAQ. The NASDAQ just kind of minor shift free fall mode. So this has pulled oil further than we might see happening on the NASDAQ, but I do not want to rule out this coming down further. So usually our better bounces are going to start happening after this returns about 75%, 76.4% to be specific, of the previous impulse wave on the upside. That's usually where we will start to see bounces again that will be able to, you know, have a more substantial break in a trend. But because this is so steep, it's not like it's a steady move into that 76.4. It's like free fall into that 76.4. So that could still push through there. Should we read through your questions here a second? Question is, this doesn't have anything to do with a specific market, but could you discuss sometime any suggestions you might have as to how to trade what the market is doing instead of what you want it to do? Yesterday I had a decent day and then got in a trade where I thought it had room to go. It made a small move and then turned, and I thought that maybe I could take profit and switch. Then talked myself out, saying to myself that it probably only go back to resistance level and come back. Needless to say, it never turned back. So finally hit the stop loss. But had I traded what I saw the market doing, it would have been good. You do well trading both sides. Is it just doing it enough so that you get used to it or used to trusting what you see and trading it? I mean, that's really what it comes down to is when I go into a trade, I already know what the cons are against the trade. And a lot of people don't do that. They focus upon what the pros are for getting into a trade. So they'll see the things that like are shiny and beautiful and nice. And me, I also have it in my mind, okay, what's wrong? You know, what could stop this? And where does it have to go by? You know, how fast does it have to go by? If it takes too long to go, what's going to happen? So it's a matter of doing it for long enough that you trust that knowledge. And that's why it's important for you guys to go back and watch the videos. I know every League of Trader session is about an hour or so. So it can get quite time consuming, especially if you're stopping and starting to take notes and diagrams and all that fun stuff. But the more you can do that type of stuff, the more you're going to start trusting yourself too and trusting the decisions, because I don't talk about when everything's perfect. You know, might do that on mentor mentor Monday, but throughout the rest of the week, we're looking at what the market is giving us, and there's all kinds of variables that the market will be giving us. So that's what's really important. And I think that's really distinctive about how I try to teach you guys about the market. I'm not teaching you, hey, here's this strategy, go out and trade the strategy. I am trying to show you, hey, here's when the strategy is best. Here's when the strategy is okay. Here's when the strategy could still work, but look at this. So you might have to go and adjust how you manage it. I might still take the trade, but how I manage it is really important. So, yeah, I mean, the more time you can spend and actually studying and reviewing, not just sitting here, but actually thinking about what you're seeing, then the faster that's going to be happening. Also, if you can start with slower markets, um, not a 50 tick today, but if you start with a slower market, then that's going to help you see things too. Lots and lots of sim trading and going back and reviewing those sim trades and looking for patterns in your sim trades. All right, let's pull up the ES. I'm not going to get into too many other markets today. Just kind of mostly focus on the indices. Got another chart here and the futures. But if you have something specifically you want me to look at, let me know. All right, so here is the daily chart on oil. And what this tells me is that momentum has picked up on the downside. So even after this corrects again, this is probably going to still keep going lower. I would bet 98% probability that you're going to see lower lows over the next month to 2 months in oil. So it might do it with a third wave down, might do it by kind of chopping down, but I think we're still going to see this going down further. The one thing that, like I said, is kind of against here is the fact that this had that extreme move, and usually this will go slower on the continuation. So what I'm thinking can happen with this is it could bounce, give us that third leg down, maybe bounce a little bit more, and then, go and do like wider drops to the downside. So we'll see how that plays out, but that's basically what I'm looking for right now. Gold. Gold was pretty darn mellow for most of the week until today. Gold was excited because, market is not looking so good, so it's going to go up. And then it realized, maybe this is bad overall. So here's what we got happening on gold, where, whoops, wrong chart. There we go. We had this avalanche trigger. So here's the parabolic move, avalanche. So what we just saw here on the NASDAQ on the 1-minute chart, it's kind of like that. Almost exactly the same thing, except this did a much stronger continuation here. But similar move to the upside, and it shows you, a different way that something can react to that. I'll show you that NASDAQ as the comparison so you guys can see that. So here you can see it, this is the daily. And we're looking at 240 on gold. And then look at what happened on the 1-minute. I mean, need to grab a 1-minute chart here. Make sure I don't have like an insane amount of data here. I should have probably just changed it to 1 day first. Whoops. Oh, it's only on 5. So see here, that same series of movement on the way up. So if we want to make the comparisons here, you've got here is basically here. Here's here. Kind of can look at it like that. This is a shallow phoenix here too, so that might be more close to what this is here. But anyways, strong upside, sharp, steep here. So this is where that was. This is where it's at now. Yeah, so if it tries to follow this as its guide, we could be looking for a pretty scary end to the day for anybody that has bought it throughout this rally. We shall see. Let's see, the euro yen. Notice the recovery right into 76.4, the move back down. So we've got just a good deal of support here, nice measured move, kind of coming back up into there. This can still break down again. Usually what happens when you get to that 76.4, it can do a bigger correction that will break that channel. So it might do like a two-wave correction or something. Right now, it doesn't have a strong indication for which way this wants to go. It's kind of like it's in holding mode here. We need to watch for smaller shifts in momentum to see how this can play out, because the way it is right now, it has like this little baby megaphone, but it's too small for a typical mega phoenix to go. We wouldn't usually see this pop as fast. It's possible, but not typical. So I think this is going to try to go into more congestion here for a while. I don't really see a setup on it right now. It's coming down off of some 2T type of action. You got your two waves and then you got the shift. It's not a pretty 2T, but that's what you have here in play. So right now it's halfway back. It could do anything here. It needs to change some momentum moves. Pull up our peso here. So peso reached this do or die point right here. So what we talk about when it comes to moves like this is you get the 1, 2, 3 down, you get the shift in momentum. If that shift in momentum breaks the lower end of that channel, you will usually get another strong flush. So that lower end of the channel is really key, but it doesn't take much to get it turned around. So this is a really beautiful example of that channel breaking. It often scares a lot of traders because many times by the time you see something like this and offers a trigger, the the channel is breaking because you might not want to get into it at a lower level because it's still at that do or die point. So once you get the confirmation, it's a pretty big move that's already in play, but it's also a very powerful move. So going back to the NASDAQ, actually, I wanted oil, not the NASDAQ. Well, I'll show you NASDAQ. So when you get this shift in momentum like that, it can be just like this little bitty phoenix that gets it and flips it and turns it around. Oil was actually what I was thinking about because it did the same thing here a little bit ago. Grab a chart. And these can flip back and then do again, which is what oil did. Really drove me batty, by the way, that it did that to me. But here, let me show you what we got going. It's like I know it was going for another move down and it just took its time. So here's what we were looking at. And we were talking about this yesterday too, right? See, there's that congestion. So I was looking at this to try to do another, push down. We already had the two waves, so I was just kind of looking for a flush. And this is very tight, very narrow. We call that the ballet pointed toe. What happens, you can get a move up, flush back down, and then the turnaround. And that's exactly what ended up happening here. And I missed this. Nice double top here. getting a good reaction to this. Let's see here. I think I got all your questions. All right, is there anything else you guys want me to take a look at? And thank you, Ari. For a special time frame in ticks. For Forex, for trading Forex, it depends on the pair. Um, each pair I kind of favor something a little bit different, and it changes over time. So I might be on one time frame for one and another time frame another. Like sometimes I'm focusing on more swing trade on it. Sometimes I'm focusing just on a day trade. So it really depends. I don't have like a core like I do in the other markets. Tick charts though, usually, let's see what I have up here. So like for the peso, 1,000 tick is a really good time frame. You can see the patterns really well on this 1,000 tick here. So that would be a good one. 400 is getting a little smaller, but still okay. This would be what I would use to help with timing on something that was like 4,000 or above. 200, again, I would use this as more of a timing chart versus the strategy chart. So when I'm seeing something forming on the larger time frame, dropping down to a 200 tick, and that's going to help me get into that trade. I usually am a little bit larger on these. So I'm usually also watching like the 3,000, looking for like main impulse waves, and then things like this where you can see like a 2B pattern, where you'll see these zones of congestion, and it gives me a better comparison for what's going on in the whole bigger picture. So I would add the 3,000, but I would use the 1,000 as probably my main strategy chart for the peso. Short-term outlook for the indices, best guess. I'm curious to see if the bulls try to mount a rally, but I am wide open as to where this can go right now, because we already have our two main moves in as a 1, 2, 3 pattern on the downside. That means we are in the widening up zone where there's lots of possibilities, and all drops down to how every single momentum move changes and shifts. So it's going to be more of those fly by the seat of your pants markets as we go into the week ahead, where we're watching what these shifts are doing on the intraday timeframes. If you used to watch a 2,000 tick chart, you need to be watching like an 800 tick chart. So go up to a larger time frame to look for them, and that will help keep you grounded and away from the craziness that is going on like a 50 tick right now. I was getting dizzy watching these charts the other day. I can't focus anymore. All right, everyone. Well, thank you for joining me here today. I will see you back here next week. Karan, I can definitely pull up some of those next week for us, especially during our gappers intraday stuff. So I'm sure we'll find some of those that are gapping next week. All right, everyone, have a wonderful weekend. Stay safe, and I'll have this posted up on YouTube as soon as I can. Last week should be up there too. So if you want to go back and review it and what we were seeing before we went into today, this is a good chance to go do that too.